Hello, my name is Mike Florin. I'm the owner of Low Cost Mortgage. Today's your weekly update for June 20th, 2025. Well, if you didn't know Low Cost Mortgage, we save people a lot of money in their loans. We just saved somebody 25 grand compared to the closest competitor is actually about 45 grand compared to the highest cost one, which is who they originally were going to go with. That's kind of ridiculous in my opinion. I think mortgage companies are just charging way too much money. It's a loan. There's a process. There's federal rules. It's pretty fast and easy for us to do loans, just like it should be anyone else. So in that regard, if you want to save money, come use us and you're going to see we've got the lower rate for lower cost. There's my pitch. Okay, so what happened this week? The Fed did not decrease their rate. Well, what does that mean? Well, rates actually came down a little bit more. Well, if the Fed does not decrease their rates, but rates come down a little bit more, what does that mean? Well, mortgage rates are based on stability and the stability of the markets themselves. In fact, if we look back in history, I'm going to pop open a chart here and I'm going to circle last September and December. And these are the two Fed rate cuts. And if you notice, rates went up afterwards. Why? Instability. Even if the Fed decreases their rates, there's still going to be instability inside the money markets or the mortgage markets and the money supply, if you will. And that instability is going to increase mortgage rates. Well, it increases T-bill rates, increases mortgage rates, et cetera, et cetera. Why? A little bit of an overreaction. There's a lot of different reasons why. But all we know is on the consumer side of things is if the Fed decreases the rate, there's a very high possibility that rates will actually go up afterwards in the short term. Now, there should be 2 more rate cuts this year. If they actually happen, who knows? They might not. It's going to depend on data, and we'll just see what the Fed does. So everyone's expecting 2 rate cuts this year, later on this year. Could this change? Yeah, it could absolutely change. But as of right now, that's what they're expecting. For mortgage rates, though, what are they doing? Well, let's pop open a 3-month chart. And as you can see at the beginning of the chart here, it was trading on a normal range. And then it went down a little bit out of the range, up a little bit out of the range, and then it started trading higher, and now it's kind of drifting downward back again towards that range. Now, does that mean we're downward trending in rates right now? I wouldn't call it that. I would just say we're on the higher end of a range. Are we the highest that we've ever been? No. Is it on the higher end of things? Yeah, sure, it's on the higher end of things. But let's actually look at this for a second. Before the pandemic, government was in the low 4s. They're currently high 5s. That's a 1.5% difference. Is it substantial? It is. Is it substantial when you have a higher loan amount? Oh, it's a big deal when you have a higher loan amount. But if you have a lower loan amount, not really that big of a deal. 1.5% doesn't really change the payment all that much. On conventional, it was high 4s before the pandemic started, and it's currently mid 6s. Again, roughly a 1.5% or so in difference, a little bit more than that in this case. But is it going to break things? Well, it's going to be a higher payment, that's for sure. But we're seeing loan estimates from our competitors up in the 7s still, and we're in the middle-ish 6s on conventional. So it just kind of depends on who you're going with as to what kind of deal you're getting. So for you realtors out there that have borrowers that need a better deal, have them give us a call. We can walk through it real fast. We'll get them pre-approved in about 10 or 15 minutes on the phone. Okay. Last piece of data here is home flippers. But home flipping used to be a decent percentage of the market. Well, in the last quarter, the first quarter of 2025, it was only 1 in 12. So for every home that closed, right, or 12 homes that closed, 1 was flipped by somebody, and that's down pretty sharply. In fact, we haven't seen numbers this low since 2018. That information comes from the Scotsman's Guide. You might want to dig into it future if you want to, but one of the leading causes they stated was the profit margins roughly are expected to be 25%. Now, if you're flipping homes and you're doing less than 25% and you think you're making hay, great, go for it. Absolutely. If it's your model and it's working, great. If you're a home flipper and your typical traditional, I want to say profit margins 35, 40%, it's going to be harder to find those deals. So good luck trying to find them, but just information for everybody. 1 in 12 now is deals that are for home flippers. Anyways, rates, they're going to be trading on the higher end of things. We're saving people money every single day in mortgage rates or the deal itself, you know, the rate and the cost of rate. But yeah, if you need any help pricing out a loan or anything else, you can reach us 7 days a week up until about 11 o'clock at night. Just give us a call. I got to go. I'll see you. Bye.